Beyond the Hood, stories and strategies to fuel dealer growth.
Welcome to Beyond the Hood with Tractor Zoom. I'm your host, Andy Campbell, and my guest today is Leo Johnson from Johnson Tractor, a 9-store Case New Holland Kubota dealership in Wisconsin, Northern Illinois. And Leo and I today talk about tons of different topics surrounding mergers and acquisitions, leadership, succession planning, a ton of other things, especially a good healthy dose of sports analogies. I hope you enjoy this conversation that I had with Leo as much as I enjoyed having it. Let's jump into the conversation with Leo Johnson from Johnson Tractor. Leo Johnson, welcome to Beyond the Hood.
Yeah, thanks. Thanks a lot, Andy. Glad to be here today.
Good. Well, I want to get into a lot of detail about your history and everything that you've done, but you've taken Johnson Tractor from one location, and you're the second generation owner, and now there's a third generation owner. And you've taken it from one location up to 5. Now it's 9 and growing. So can we just kick this off with, what do you look for in a great dealership to maybe merge with or to acquire?
Yeah, that's a great question. And, there's implement dealers are like farmers. There's all sizes, there's all shapes. There's some good ones, there's some not so good ones. There's some that do well financially. There's some that don't do well financially. And my experience so far has been to acquire dealerships that are underperforming in the market. A lot of times they're great people. A lot of times they're good locations. A lot of times they're in, very good farming areas, and those are essential. You gotta be in an area that's going to support a farm equipment dealership. You've got to have people that you trust and that are capable of doing the work. I guess that's probably the biggest lesson that I learned, Andy. When I started, it's kind of a long story, and I'm not going to go into all the gory details here, but I went through 4 years of college, and my dad was a parts man my entire life at a small International Harvester dealership. Of my growing up years anyway. And so the dealership was a block away from our house, right in the middle of a little town, Clinton, Wisconsin. And my mom and dad had a house a block away from the dealership. My dad walked to work every day of his entire career. And so, he never really got away from the business, but yet, when it was time for lunch, he'd lock the door and walk across, walk his one block to our house and have lunch with my mom. And everybody knew that dealership was closed from 12 to 1. There was, he had a partner. So my dad was a 50% owner. He had a partner that ran the business, did all the selling, and he kind of did it all. My dad ran the parts department. He oversaw 2 technicians, and so there were a total of 4 employees there, 2 owners and two employees. And when I joined him, I was employee number 5. Huh. So give you a little context to the size and scope.
Right.
Yeah.
Right. Much different than it is now. Just the walking across the street. I drove an hour to work this morning.
Much different than, say, my son's entry into our business here another generation later, but we'll get to that. So I started in 1978 full time, and when I got out of college, my dad's partner tracked me down. Actually, the last few weeks of college, I had worked for him for a couple of summers on the road selling. So summer of 76, summer of 77 were both really good years on the farm, and it was a pretty easy job. He paid me on straight commission, and oddly enough, that commission scheme that he had for me 45 years ago or more is basically the same thing that we employ today with 9 stores and 30-some salesmen. And it's kind of funny how some things just don't change a lot.
Right.
But anyway, what got me interested in the retail business, so I had 2 summers of selling experience. I had a degree in business administration. This was in 1978, and like there were all kinds of opportunities then. It was kind of like it was a few years ago, where everybody was hiring, and so for a young man that was single and college degree and a couple of years experience of retail selling, I thought I'd be an easy shoe-in at International Harvester or John Deere or Case or New Idea at that time. Gale Company was a strong Wisconsin company that I'd sold a lot of their equipment for my dad's partner. And so I wasn't really too concerned about finding a job. But when my dad's partner approached me, he said, "Hey, Leo, why don't you come to work for me for 2 years? If everything works out the way we think it will, I'll sell you my half of the business in 2 years." And I said,
Wow.
"Okay, well, what's that going to be?" And he says, "Well, I don't know. It kind of depends on what the business is worth then." And I said, "Well, give me a round number." And he says, well, it'll be 50,000 more or less. And I said, "Okay, well, and so anyway, I went to work for him, worked on straight commission for him for 2 years. 2 years later, 1980, he sells me his half of the business. And so, interestingly enough, when you had an interview with Ivan and Brandon, a month or two ago, and that was the same year that Ivan got in business as an owner, and
Right.
so we fought the same battles. So I won't go through all of the pain and suffering that the first 2 or 3 years, like Ivan's, were good years. And but by 83, things kind of hit the skids, and interest rates and all of that.
Right.
So we won't relive those memories. But what it did do, and what it did for Ivan, and what it did for me, is it certainly trained me. Maybe in some ways it kind of hardened me. Like maybe I grew a little thicker skin to work through all of the issues and problems that we had in the ag business those days. But it also taught me to kind of try to maneuver my way to try to succeed in this thing. And I think I was just too stubborn to quit or look for alternatives. Although in about the 83, 84, I started an MBA program. There was a local university that had an MBA program that was taught after hours and on weekends and stuff. And so at that time, of course, everybody's doing it now, but back at that time, hardly anybody was.
Right.
And so I signed up for this kind of as a way of meeting people and maybe hanging out with some college chicks or something. But anyway, I got about halfway through this program by like 85. And I'm thinking, man, I better finish, because if things keep going the way they have been in our dealership, I am going to be looking for a job, whether I want to or not. But 86 was a big turnaround, and then 87, and then things took off very well after that.
So Leah, I've got to ask you, when you started, when you were just graduated, did you go to school with the intent that, hey, the dealership is an opportunity, the potential career, or
Absolutely
were
not.
you? So you're thinking John Deere.
The last thing I was going to do was move back to a town with a population of less than 1,000 and work in this tiny, dingy little building that my dad and his partner worked in all those years. And no, I had absolutely no aspirations to be in the farm equipment dealer. My mom wanted me to be an orthodontist, but I think I would have really struggled to get through org chemistry at the university. So anyway, it's just kind of happened that it sort of worked. Although I will tell you one of my success stories in selling while I was in college. When I was a senior in college, I had already worked for my dad's partner for a couple of summers, and so I'd gotten to know a number of the farmers in the greater Clinton, Wisconsin area, and so I came home at Christmas break, and I'd work for him for a few days and go out and sell a few pieces, and he'd cut me a check, And then my spring break of my senior year, of course, all my friends, they were going to Daytona or places like that. And I came back to Clinton, Wisconsin, and sold for my dad's partner for a week. Actually, I think I worked about 4 days or 4.5 days. I sold enough stuff to make $1,000. And back then, that was a lot of money.
Right.
And so I go back to college. I've got 5 weeks of college left or 6 weeks of college left. I'd already made enough money that year to kind of have my expenses paid, and I had an extra $1,000 to spend in any tavern I wanted or for whatever I wanted. And I never had felt any other time in my life that I had so much discretionary income that I didn't know what to do with it all.
So what did you do with this?
Well, I did spend a little bit of it on beer. But I bought a really nice guitar. That was what I ended up spending my the lion's share of my $1,000 commission check on.
Oh, that's good. And I mean, I don't know if this is exactly how it played out, but I mean, you at least had some traction in there. So when your uncle approached you about,
not uncle, not even related, just partner.
Just partner. Okay. So when he approached you, at least you had an idea in your head, like, okay, there's a chance that this could work.
Yeah.
But still,
I knew that it would be. I knew that it was something that I could make money on. I didn't realize how cyclical the farming and farm equipment business was at that time. I'd never seen anything but kind of easy sledding, and so I do equate that a little bit with some of the younger people that work for our company now. Maybe my son and my niece included, but anyway, yeah, it was easy going for a while. It was at year 3 or 4 that really got challenging.
So then if history doesn't quite repeat itself, it certainly rhymes, which then brings us to today, right?
Yeah.
Because, you know, as your son and niece, right, as they enter into the leadership of the business, they've probably gone through a couple of years of, great years. And now we're entering
absolutely.
into
A couple of years working for my brother and I, and now they've got 2.5 years under their belt as each being 25% owners of the company, and yeah, their shares have grown in value substantially, but so have the responsibilities and the risks involved. Right. And so it's an interesting, but that's very true. I mean, it follows my path very closely. Yeah. Okay.
So on that thread, and we're going to kind of bounce around here a little bit, but now that we're talking a little bit about the succession planning, and you and I chatted a bit about this beforehand and the similarities between farm succession planning and dealership succession planning. But you mentioned timing makes a big difference. And you guys do things maybe different than a lot of people might traditionally approach succession planning. So do you want to describe Johnson Tractor's succession planning, I don't know when you started with the current CEO, but what does that path look like, and what do you guys have planned out?
Yeah. Well, to give you a little background here, I'm 68 years old, and when I had intentions of maybe quitting at 50, but things were going really well, and maybe I'm greedy enough that I wanted to just stay in a little longer and see the business grow a little bit more, and so I did. And when I hit 65, or maybe 64, I told my brother. My brother and I were 50-50 shareholders have been for years and years and years. And so I told my brother, I said, well, I think at 64, 65, I'm out of here. Well, we decided to build a new building at Rochelle, Illinois, and we started that about the time I turned 65. And so, and that was my project. And he says, well, why don't you get Rochelle built? We get moved in there and then hit the road. And I said, yeah, that's fine. We had already decided, and at this point in time, my son had already committed to come back to the dealership. My wife, who is I call her our corporate conscience, because everything that we do, we run through her, and she got an amazing ability to sift the wheat from the chaff and say, okay, is this the right thing to do? Whatever. Mm-hmm. My brother and I both joined our company well, me, I told you my story already. My brother has one somewhat similar. He's 4 years younger than I am. But he joined us immediately after college, as I did. So neither one of us had really ever worked for anybody else other than me working for my dad's partner for a few years and my brother working for me for a few years before he ended up buying into the company. So we decided years ago, and I think kind of at the insistence of my wife, that if our son Patrick is going to join the company, he's going to work somewhere else first. And so when he was going to college, well, actually through high school, he kind of worked a little bit on and off, and I thought, okay, there's a chance that maybe he'll come back to the dealership, but I wasn't really sure. Well, he's a smart kid. He got that from his mother, obviously, and he ends up getting accepted into an Ivy school, and so he goes out east and does 4 years of college and does very, very well at college, and I'm thinking he's got higher aspirations than to be in the farm equipment business. Kind of like my mom thought of me being an orthodontist instead of being a farm equipment dealer, and. So anyway, he went to work for Bunge, a big commodity trading company, and long story short, he's a really strong language guy, and he ended up learning Russian when he was in college, did a semester in Moscow, and then eventually got a job as a grain merchandiser in Russia. And so that's kind of a cool thing, and it was really fun because when he was living there, I'd go over and visit him once in a while, and his apartment was right on the border of that inner circle, and so if the Kremlin would get, if that would blow up or whatever, something,
he's there,
he'd been right there, and so anyway, I'm glad he's home. Right. He's been back and has been part of the dealership for about 5 years, and as an owner the last 2.5. My niece, my brother's daughter, had somewhat of a similar path, but she didn't stray quite as far away from home as my son did. She ended up going to work for Case IH for a while, and she did 2 or 2.5 or 3 years with them, and then asked if she could come back and join the dealership, and so we were glad to have her. We were at a point in time when we were expanding locations, and we needed some more management help, and we knew she was quite capable. So let's see, where were we going with this, Andy? Succession.
And then
okay,
right, yeah, exactly. What's next then? So
we both had a really great vetting process. But when I say we both, my brother and myself, with our children. I've got one boy and he's got one daughter. I do have a younger daughter, but that's another story. We can touch on her a little bit later. But these two were both seemed interested in the business. And so after working someplace else for 2 to 5 years, whatever, came back into the dealership, was working for us for a couple of years, and then Eric and I made the decision, hey, it's time to transition some ownership. And so we basically worked out a deal where I sold half of my shares to my son, my brother sold half of his shares to his daughter. He and I are both financing them, but the company it's grown enough that it's big enough that we can distribute enough to cover their payment to their dads. So that they're not really seeing any great riches here yet. My brother and I are a little like our dad was. He was Norwegian and didn't give anything to anybody except my mom in the church, and and so far in our lives we've kind of been somewhat the same way. But there will be a time when I'm sure we'll need to do a little more extensive planning. So as of today, there's 4 of us that are shareholders. Those 3 still work. I don't, and it won't be probably too many years where we'll figure out how to. My brother and I will each divest of the balance of our shares, and more than likely to my niece and my son. So that's where we're at with ownership. Now the challenges of that is growth. And we can talk about that if you want to segue into that. It's fine with me, but it's very near and dear to us because we've gone through some substantial growth.
Right.
Yeah,
And
go
to
ahead.
hit on that point too, I mean, talking about growth because it's inherent in growth is, when you started, you had to take a risk, right? I mean, you had, kind of bird in the hand type of John Deere opportunities and everything else versus, going to the dealership in a smaller town. So there's a risk right there. And then you talked about the acquisition. I mean, going from 1 to 5, there's always this inherent risk. And in work that we're doing here at TractorZoom, we're studying a lot about digital transformation. And one of the tenets that large consulting companies have talked about here is the ability to take on risk in growth. And now they're talking digital transformation and growth through there. But I see a similar pattern. Even when you're talking about, Brandon and Ivan, it's the ability to take on risk, and then when times are good, it's easier to do. But you even went through some rough times. So the ability to evaluate risk, take on risk, and then know that or at least have faith that it's the right thing to do, and put the process in place to move forward. I just wanted to highlight that because it's a common thread that I'm seeing, and I imagine that's part of this growth strategy too.
Yeah, and the whole concept of risk is near and dear to me too. My take on it is the greater the opportunity to take risk, or the greater the opportunity for success is parallel to the amount of risk that you're willing to take. And the amount of risk that you're willing to take is kind of based on how much you care. And I don't mean to be flippant about this, but I'll give you a little example. So I became half owner of our dealership, and I bought my half. I paid the $50,000 to my dad's former partner over a period of time. He financed me, which was good. And that all happened in 1980. So by 1984 or 85, I'm going to say 85 was the worst. Our company probably had a negative net worth. And it definitely had a negative net worth if we would have had to liquidate, okay? Mm-hmm. The assets that were on our balance sheet, used equipment, whatever, probably weren't worth what they would have brought at auction in 1984 or 1985. But we slugged it out, and when I say we slugged it out, I slugged it out. Mm-hmm. My brother had joined me by then, but was still kind of working as an employee, didn't have any ownership in the company. And then the world kind of changed. We were an International Harvester dealer, and then when Case bought International Harvester, or Tenneco bought International Harvester, that created a lot of opportunities for some. It was a challenge for some, but it created some opportunities. And one of the opportunities that it created for us was to purchase a company store at Janesville, Wisconsin. We had our small dealership had grown from 1980 up until 84, 85. We were in a new building, which of course the timing on that was all wrong. But I was able to get that sold to a trucking company, and then we turned around and bought a Case company store. This was about the time my dad retired then. My brother was with me, but didn't have any ownership then, but would assume some ownership shortly after that. So you talk about risks. I mean, we moved our stuff to Janesville. We sold the building in the little town we were in, and then we bought all of the assets, all of the parts, everything with the dealership except the real estate, but they were in a long-term lease with a local investor that was just dirt cheap. And it was a pretty decent building. And so I go to the closing, and Case insisted on a cashier's check for $500. The parts manuals, they wanted cash for. Everything else, all of the parts, all of the furniture and fixtures, all of the vehicles, all of the new and used equipment, everything else was sign here, sign here, sign here, sign here, sign here. What was the risk to me? Nothing. I
Right.
had nothing at the time. I had a company that probably had a negative net worth, but Case believed in me, and so 86 turned out to be a profitable year. 87 was better. 88 we had a drought, but it still was a decent year. And then things kind of blew up from there and got way, way better.
Right.
But as far as growth goes, from 1980, I ran one store from 1980 till 2006. So it took 26 years for me to figure out that hey, having more than one store is not a bad thing.
Hey, everybody, a quick break from the show, and then we're going to get you right back to the conversation. But I wanted to take a moment to let you know how TractorZoom is partnering with all of our dealership partners to fuel their dealership growth. We're doing that with TractorZoom Pro to give people better valuations, faster access to it, and the ability to manage their inventory using AI, using large data. Even if their dealership doesn't have the capacity to develop the AI and the large data themselves, it's all there within TractorZoom Pro. And also with Anvil Pro, integrated business systems solution. You can actually cut costs by integrating solutions, not paying for all these extra one-offs, and keep people in the same solution so you're not constantly switching screens. And then you could optimize your workflows, do a lot of things with automation that technology should be able to do right now. So just two ways that TractorZoom is working with our dealer partners to really help them fuel their dealership growth. Okay, you can check out some links in the show notes. You can also go to TractorZoomPro.com to check all that stuff out. But we'd love to at least show you all the different ways that we're helping our dealership partners. Okay, let's get back to the show. Hope you're enjoying it. And so I can imagine what that scale does, but can you just articulate one or two of the big points of having one or two or more stores? Like, where do you really see the benefit when you look at your financials or when you just look at your daily operations?
Yeah. I'm convinced that if you have the right people and you're in the right location and you got a good market, and you continue to try to do the right things day in and day out, that you can generally make money and generally succeed, and you'll probably get a certain share of the market. We're never going to get 100% of the market. And with John Deere holding 40 to 50 to 60, depends what you read, depends what day you read it, it'd be amazing to get half the market. So if you can settle into that 25 to 30% or whatever Case dealers normally get in their market, and the better ones do a little better than that, the worse ones do a little worse than that, you'll do okay. It's getting that opportunity to participate in that market. That's the hard part. So we talk about barriers to entry in any given business or any given industry. Farming, for example, today. How the heck can a young guy that's got nothing, get into a farming operation and grow that with the cost of land, cost of equipment, cost of inputs, you name it?
Right.
Maybe the best manager in the world, but you take some capital to get going. So once you get to that point, and we were to that point in 2006, we were to the point where we had little or no debt, and we ran one store, and it was a pretty good size volume store. We were into that 25, 30 million volume area in the late 90s, early 2000s. And so when an opportunity came for us to buy another store that was in a good market, we took a leap of faith there. Because we'd already kind of grown our business pretty well in our one location. We were doing all right. In fact, we were doing quite well. But it was a game changer going from one store to two, and then from then on, adding locations got easier.
And one of the things that I've heard from other dealerships, and I can see it with yours as well, like having that time to develop processes and just a great standard of business in that one location. Yeah. Then when you adopt it, when you have a good process and a good standard, then that replication just becomes so much easier.
Well, and I think, and as Brandon and Ivan, when you spoke with them a few weeks ago or whenever, when you've got one or two stores, how do you pass on the procedures and the standard operating procedures, whatever. It's really kind of tribal knowledge. This is the way we do it. And okay, we get that. This is the way we do it. When you get to 3 to 4, then all of a sudden you really have to have things written down. And we kind of made that leap of faith when we got into our second store, because we had 25 employees at the time. The store that we bought had 25 employees, so all of a sudden we doubled in size as far as employees, and the market that was in a good market, and so we basically doubled in revenue almost immediately, and so a lot of things that we took just for granted, our work ethic, our whatever, was really just tribal knowledge, and we'd say to, everybody knew that we lock the doors. The last guy that leaves locks the doors, shuts the lights off. Okay, seems like kind of a simple thing. But yet if nobody knows that that's got to be done, and maybe somebody else is coming in, maybe there's an employee that's out that doesn't have a key, whatever. It forced us to come up with policies and procedures. And so how we dealt with that?
Yeah, that was going to be my question. So how did you do that?
We hired my wife. So we made the deal on the second store, and I called her, and she was at work. She had a career in banking, where you talk about policies and procedures. I mean, they got that down to a science. There isn't anybody that's got more policies than a bank, and she'd had extensive banking knowledge and experience. And I said, honey, I need you. I got to have you. And you got to help me here. And so she came to work for us, and she likes to describe leaving her cushy office, wearing a business suit and heels and every day, and coming into our, well, we didn't have a dirty, dingy building. It was an older building, but we had it fixed up pretty nice, but it was a total different story. Walking through the shop is a whole lot different experience than walking through the lobby in a bank.
Right.
Yeah.
So did she also help then? Because I'm curious on the relationships with farmers. As you went from one store to 2, and then up to 5, and now 9. How do you ensure that those relationships, that your on-the-ground salespeople, especially as many new salespeople that are kind of entering the industry right now, how do you ensure that they're developing relationships just as well as what you guys did, and continuing to hold the good relationships? Because that's a lot of social capital that you're handing off to some young person.
Yeah,
it's tough.
That's important. I mean, we're a business-to-business type transactions, but yet we are definitely a people business. And they talk about corporate farming, and corporate farming is a bunch of BS. There's plenty of corporations, but most of them are family corporations. So it's really more of a family type of enterprise that we're dealing with. Now, I'm not saying that there aren't some very, very large operations that are corporate farms. There are. But most of our customers, our sweet spot is a family farm that's 2,000-3,000 acres, and is big enough to need their own combine and a 16 or 24-row planter, and a couple of big tractors and a big grain cart, and the machinery investment per acre these days, everybody sees, oh wow, this, how could anybody ever afford a tractor? But it's actually, the dollars per acre spent today are not a tremendous amount different than they were not that long ago. Stuff is more productive. You can cover more acres in a day. There's a whole lot less tillage, so anyway, developing the relationships, as you mentioned, Andy, is a key. It's probably first and foremost for us to develop our relationship with our employees, though, and make sure we kind of understand where they're at and what their capabilities are, and and see that they're going in the direction that we want to go. Now, do I get out, or did I get out and talk to every farmer, regularly once, before I retired? Absolutely not. But I've got salesmen, or I had salesmen that were so good that farmers just loved, and they'd come in and shake hands with me if they'd come into the store, or I'd see them someplace at a restaurant or a county fair or whatever, and love to strike up a conversation. But as the sophistication of equipment got better, guys like me that were dealer principal and also the main salesman kind of went the way of the dinosaur. I just didn't have time or the ability to grasp all of the technology, to understand all of the features and benefits of the products we were selling. But I was able to grasp the idea of hiring somebody or growing somebody into that kind of position that could do a really good job. One of the questions you'll have, and I brought it up, so I'll kind of expound on that for a second, if you don't mind.
No, go ahead.
Is, where do you get those employees? Where do you get those?
Because that's come up in at least 2 to 3 of our podcasts.
It's right. Yeah, everybody wants to know. The simple answer is, if you can, you grow them. And it doesn't mean you got to have 10 children. It's nice to have one, though, at least, if you want to continue into the, your legacy or whatever. But you start somebody out. I look at all our most successful salespeople. Now, last year, out of our 9 stores, we did, call it $350 million in total sales. And I look at our most successful salesmen, and most of them we grew. Some of them may have started in shops, some of them may have started in parts, some of them may have gone through and been parts manager, store, shop manager, whatever, and gravitated towards sales. And did they start out as our best salesmen? Absolutely not. But they already had an idea of the customer base. They had a very good idea of the equipment base, and they were the kind of people that when we'd get on a run of something, they could go out and really sell a lot of stuff. And we talked about this at one time. College basketball and pro baskall. I love.
I was going to ask you about this basketball analogy. Yes, yeah, so you take it.
Well, and baseball now. I love watching baseball. A team gets on a run, and whether it's end of season, middle of the season, beginning of season, or maybe just even in a game where they're, college basketball team's down by a dozen with 7 minutes to go, they get on a run, all of a sudden they win the game. Maybe in the first half, they start way up, the other team goes on a run, and that's what I love about the game of basketball. It's a kind of a game of runs. And farm equipment sales is somewhat similar to that. And I can think of a lot of times when we've had an opportunity to pick up some extra combines or whatever. Planters are a good example. Steiger tractors are a good example. When all of a sudden the product gets hot, either it's really a great product, got some new features, whatever, and you can go out and make a run, you really got to do it, and you got to do it quick. Because like every college basketball and pro basketball team, the run stops. The other team catches up eventually, or it makes the game close, and maybe you can still come out on top if you got enough points at the end. And I think that's similar to running a farm equipment dealership. You get on a run, you got to make hay. When the other team is trying to catch up, you can't just give up, but you got to recognize that competition is going to, at some point, catch up with you.
Right. Yeah, I remember when we talked about this, and then the analogy. My dad would always say, you got to hit home runs every once in a while,
Right.
but then the rest of the time, have your system set up so you can hit the singles. And on the basketball analogy, have your defense good enough that you can contain what they can
Yeah.
contain, so you can continue to just not to lose so much ground. But then, once you're on fire, you just, put the gas down and you roll. And again, but you need to have the kind of the systems, the process, and the culture, and the people set up so that when you want to turn it on, you hit the gas.
Yep. So,
Well, I'm glad we got the basketball analogy in there, though, because that was one of my big points that needed to hit.
So to sum it up, the keys to my success are, number one, marrying well, and number two, having a really intelligent son.
So good, which you can draw back to your wife again. You are building a lot of marriage capital right now.
Yeah, right. Okay.
Good. Well, then, so let's transition a little bit to the mergers and acquisitions. So still talking about
Sure.
the growth side of things, but you guys, you said, your dealership did well, but you're kind of surprised as you acquired other dealerships on how much growth that actually brought.
Yeah.
So, and we kicked this episode off by talking about, what makes a great dealership when you look at Target. And you said they're kind of underperforming a little bit.
Yeah,
is there-
it's a mature industry, Andy, and there's very little new ground to cover. Now, with that being said, there's some current moves in the market that are kind of interesting. I think Claas is an interesting one. I think AGCO is an interesting one. Both are supporting retail dealerships in areas where they either haven't been able to get private money or for whatever reason they feel that the market is being underserved. and this is a kind of a relatively new phenomena. I mean, you go back to the Case Company stores was really the last time there was any kind of systematic sort of entry from the OEMs into the retail end. So anyway, point of my story here is that if you're a Case, a Deere dealer, or New Holland dealer, chances are pretty good the only way you're going to be able to expand is to buy a neighbor, or buy a dealership that's for sale.
Right.
I can point to, I look at some of the great consolidators in our industry, and the majority of them have bought dealerships because they didn't have a son, didn't have a daughter, didn't have key people, whatever, that either could afford to buy them or want to buy them. Now, private equity is kind of another little sidebar, and we can talk about that if you want to, but we see private equity mainly involved with the industry leader. Usually those that are in number 2, 3, and 4 in the industry don't have the luxury of being real appealing to private equity. And a lot of that is because you got dinosaurs like me that kind of hung around and either didn't want to sell or too stubborn to sell or thought we had bigger and better ideas. So the opportunities to acquire a dealership generally come after the dealership has already seen its heyday. And maybe the building isn't in such great shape. A new one was built in the 80s, but that's 40 years old now. And some dealerships still talk about the new shop, that they built in the 70s,
Right.
And so the capital requirements are just so huge these days, and the OEM requirements are so huge, and the amount of control that the OEM has on who you sell your dealership to, these are big factors. So the short answer, or the long answer to your short question was, what makes a dealership appealing? Number one, it's got to be for sale. And if it isn't for sale, can you afford to pay enough to get them out of business? And here again, most of these 1 and 2 and maybe even 3 store operations are, small family held companies, and like ours is and has been. I like to think that now we're a little bit more significant in the marketplace, but that's a very biased slant. So number one, it's got to be for sale, or be willing to be, to be bought or to merge or whatever. And for us, it's got to be a territory that we like. There's got to be some very viable agriculture. It amazes me, some of the dealerships that have succeeded in areas that I think, oh gosh, what kind of agriculture is there to support that? And whatever is there, they got it.
Yeah.
So being for sale is pretty important. Having and these days, having a group of employees that have got some experience, and we've already talked about, and I talked about how do you get good employees, and you get them organically, but that doesn't necessarily mean they came from my garden. They may have come from my neighbor's garden, and they may be good employees, and because of their particular situation, they're great employees, but they're not good future owners. And so they kind of welcome with open arms people like the Titans and the H&Rs and the large dealers that have really gone on a great consolidation effort. And in a small way, the Johnsons, like my family, we've gone into markets and bought dealerships and created jobs and kept people working and added to the tax base, and hopefully at the end of the day, the month and the year, there's a little profit left over.
Yeah. Are there anything, when you flip the script and look on the other side of things, so if you were to, sell, or, say you're in the position, is there anything that you would do to your dealership? Say if you're a one-store location, you wanted to exit, is there anything you do to make yourself more attractive? Obviously, let people know that you're willing to sell, but then you have the price negotiation.
The biggest problem with that is that single stores or 2 or 3 store complexes that talk openly about the desire to exit the business, they think, oh my gosh, we can't tell anybody because all our customers will leave. Well, that's not really true. The customers will still deal with you. They know that if you're not there, somebody else will be there, for the most part. And so yeah, getting the word out is I think if I were to put 1 or 5 or all of our stores up for sale today, the thing that I would do is the things that we do every day. We make it more saleable. We cut the grass. We line up equipment. We paint a building that needs painting. We build a building where we need a building. We have a current sign. We have good employees in place. The thing as let's say a single store owner operator that wants to retire, doesn't have an exit plan, the worst thing that he can be at like the stage of my life or the stage of somebody that's wanting to get out is to be the main salesman. Because it is a relationship business, and if you've got a strong sales force already in that dealership, the customer doesn't really care who's sitting in the dealer principal's desk. Their point of contact is their salesperson, their parts people, and their service director. And and if those people are all good people, it doesn't matter what who's signing the paychecks.
Yeah, we talk about that quite a bit with a lot of our partners about, even if your top salesperson leaves, do you have records of those customers, and then that process to stay,
but that's part of the process is building bench strength, and so when you, and that's a little hard to do if you've got, say, 25 employees, to have, say, 2 or 3 extra people, or people that maybe aren't making you much money now, but you think there's potential, and they're the kind of guys that can come in and score a dozen points in the second half. That's what you need. it's a lot easier to do when you've got a little larger critical mass.
Right. Yep. But I love keeping on the basketball analogies, because after this is over, you and I are actually going to coach. So, okay.
Well, let's not even get into coaching. The last time I coached a team was my daughter. My daughter's either 4th, 5th, and 6th grade, I think, and she's 23 now. So it's been a few years.
Yeah, I might call you back. You never know.
Yeah.
So the getting down to the numbers then, because Johnson Tractor continues to look to grow, and then even though you're in 3rd generation now, you still have that growth mindset. On the number side, are there financial metrics, and I shouldn't say just any financial metrics, other key performance indicators, KPIs, metrics that you look for that are like, they might only be 20% of the metrics, but they make 80% of the difference when you're evaluating how strong they are.
Yeah, we don't have a formal board of directors for our dealership. We have more of an informal board, but we do act like a board and make decisions as a board. And there's about 7 of us in that. And if you ask the other 6 about key metrics, they'll rattle them off like that, because we pound those to death. Debt to equity is critical in a dealership. Return on sales, I think that's probably my number one thing. But debt to equity is and if you want to talk about numbers, the numbers that I like, the old number was 5% return on sales. I remember a very prominent dealer principal from a very large organization in the Midwest that stood up in front of a group and said, there's no way you can be a combine and tractor dealer or a row crop dealer in the Midwest and make 5% return on 5% return on sales in your dealership. Well, he retired about 6 or 7 years ago, and since then, we blew the socks off of 5%, and now maybe as things normalize, it'll be more like that again. But if you're not doing 5% return on sales, so simple math on that, net income divided by total revenue is return on sales. Mm-hmm. So if you're not doing that, you need to be looking at why. And then we boil it down, then we break it down into metrics of each department, and we could go through that. The next thing is debt to equity. 3 to 1 is right on the edge, and if your debt to equity is higher than 3 to 1, you probably better be getting your debt to equity more into that 2 to 1 or less when it's time to turn it over to somebody else, when you're ready to sell. And so a high debt to equity generally signals too many whole goods on hand. Mm-hmm. Now, the third component then is inventory turn. So new and used inventory turn. What should it be? Well, I don't know. 2 is used to be the number on new, and 3 to 4 on used. During COVID, it was a lot faster than that. 2024 is probably going to be worse than that, just because of the industry. The back orders are now, from last year, and some of them 2 years ago, some of them 3 years ago, are just now hitting the lots, and you're getting these semi-load after semi-load of equipment, and you're saying, wait, I don't need any more. I got plenty of inventory, but yet, you ordered it, and you ordered it when it seemed like the right thing to do. And oh yeah, by the way, that's not a cancelable order. And is your rep gonna help you out moving it somewhere else? Everybody's got the same issues, so I don't see much of that happening at all. And it certainly isn't happening with our dealerships. And we certainly have too much inventory right now.
Yeah. I just did a webinar yesterday, and categories change, but for the most part, I'm seeing about a 14 to almost a 20% decline in the turn rate for used this year as opposed to last. And last year is even slower than obviously 22.
And what gets tied hand in hand with that? Interest costs.
Right.
So if you've got a willing banker, and most dealerships that are left have probably got some room on their line or can increase their line of credit if they need to. And most dealerships deal with banks that are still relatively hungry for loans. But what a radical turn between, let's say, 2022, 2021 maybe even, let's call it 2021, where you could sell everything you could possibly get, new or used, didn't matter. And so your turns were phenomenal. You weren't borrowing any money because the inventory was turning so fast. And at that point, interest rates were 2.5%, 3%. You could have borrowed all you wanted, but what would you do with it? There was nothing to buy, unless you thought going out and purchasing some used inventory at hyperinflated prices was the right thing to do. So then fast forward to 2024, and what have you got? Well, you got all this inventory now that's backed up. You've got some combine trays left from last fall that you haven't been able to get because the combine market's dropped. Why has the combine market dropped? Well, the price of corn and beans has dropped substantially. And are you able to go borrow money at 2.5 or 3 today? Heck no, it's like 7. And so, times have definitely changed. And that's why I do believe that there are going to be some opportunities for further consolidation in our industry in the not too distant future.
Yeah, but that's still, that's going to happen. I think we're kind of starting to see it happen already in a couple of dealerships. But the focus on, I'm just going to kind of reiterate the debt to equity ratio, return on sales, and turns, both looking at new and used. That's good because you can focus on so many different metrics that are out there, but
you can. And if you focus on those helps. 3, you'll do just fine.
Good. Okay, so I'm going to kind of shift gears here and talk about advice as you've now gone through both ends on a succession planning. You're kind of you've seen it all, and you've seen it when there's been low opportunities for technology, and then you've seen, recently now there's a lot of technology out there. There's a lot of different types of tools and, advice. What kind of advice would you give people who are thinking about succession planning now? And so not mergers, acquisitions, but keeping it within whether it's a family or whether it's a business partner. And maybe let's narrow it down. Any tools or technologies that you think you should probably look at investing in these?
Yeah. Well, look at the business itself and compare it to a farm. High capital expenditure, not an easy entry, so high barriers for entry, right? Mainly family owner operated, and generally speaking, it's a substantial part of the shareholders' total net worth, okay? Many of us, myself included, have poured back the majority of the money that we've made in the farm equipment business back into the business, either to grow it, the location that we're at, or to buy another location, or to build a new building, or for whatever the case may be. And so I think that there's a large number of owner-operators that are like me, that had spent a career or have spent most of their career doing this, and a substantial amount of their net worth is tied up into the dealership business. Okay. So then when it comes to succession, we've heard these stories numerous times. Which boy gets the farm, and it's a tough thing. It's a tough thing as a parent. It's a tough thing as a business owner, and it's a tough thing being a 60-year-old man, or 68-year-old man in my case, that plans to live a long time. And I want to retire comfortably, right? So how do I pass my shares of stock, or my farm, or whatever it is that I want to wind out of, to either another generation or whoever, and yet be able to live the lifestyle that I think I want to live when I'm retired? And that's a tough question. So let's talk about family first. My wife and I have had a lot of luxuries in life. One of them for me is I married up, as I mentioned before. I did a really good job marrying. And number two, I have a brilliant son, and just love him to death. He's not only a smart kid, but he's a great kid. You know, he's 31. He's not a kid, but a great man.
Yeah.
And I have a daughter who probably has no interest at all in the farm equipment business, more than likely. She's 23. I'm not sure she really knows what she wants to do. Well, she's told me she doesn't really know what she wants to do, so it's not my premonition. She's told me this, you know. So she's been through college, and she's kind of in her gap year thing going right now. And is she going to have a spot at the dealership? Yeah, if she had a passion for it, that'd be great. But are we going to create a job for her? Absolutely not. So then, you know, my wife, who I've already told you is our corporate conscience, she's my personal conscience too, of course. And you know, you got to treat your kids the same. You know, you got to treat them fair. You got to. There's always exceptions to that, but you know, if you got two good kids, one of them wants to be a farm equipment dealer, the other one wants to be a bongo player in a folk band. You know, it doesn't matter. You got to love them both. You got to treat them both as your children. You know, and part of that is being fair with them. My dad solved that by treating us all fair. And you know, if you want to be part of something, get your checkbook out. And that's back when we had to make those decisions. It was easy to do, but today it takes a pretty big check, you know.
Right.
And so and I don't mean to be downplaying this because it really is a critical thing for any dealer and probably most of the dealers that are watching this today, to figure out, all right, where's this thing going to go and who's in a position to move it forward. So in our little world, we ended up selling shares of our company stock. And as I mentioned, I sold half of my shares to my son. My brother sold half of his shares to his daughter. We didn't do any of this, you know, and we never did have this 49-51% or anything like that. And my brother and I just got along all these years, and we still get along well. And I'm hoping that my son and my niece get along as well in their careers as my brother and I did. Do you plan for contingencies in case things don't go so well? Well, of course, you got to have buy-sell agreements that are fair. And then the other thing that a lot of us owner-operators that have got the majority of our personal wealth tied up into dealerships is that most of us have split off the building ownership from the dealership ownership, okay? We rent from ourselves. And we did this many years ago, split off our building ownership from our dealership assets, and the dealership pays a monthly rent on a building. And it's a triple net lease so that the dealership ends up paying all the expenses of repair, the maintenance, and all of that. Okay, you had a question for me here, Andy.
Well, no, yeah, and maybe you're going to go into this too, but I've seen other businesses do this and do it well. Do you want to explain why that's a good deal?
Well, from a tax standpoint, I'm not qualified to really talk about that, although I think at the time there were some tax. Well, for one thing, you can charge yourself kind of whatever rent makes sense. You don't have to pay FICA on rent. You don't, you know, there are some small tax things. But the main thing is that if you are going to sell, you can sell the dealership, retain ownership of the building, and still collect a rent check. Kind of simple as that, right? Sell the dealership. Andy, if you decide you want to buy Johnson Tractor tomorrow, write us a check for the dealership assets, and We'll rent you the buildings as long as you want to rent them. And it's a nice retirement income. So is that a way to diversify your portfolio within your dealership? Probably, because, and I'm not saying that we're going to do this in our particular family, but if you've got multiple children, is there anything wrong with having those that aren't involved in the dealership to share ownership in the real estate? Okay, so you don't have to go to a board meeting to get a rent check. You write a lease for 5 years, 10 years, whatever. Maybe some escalation in it. You put it all pretty in black and white that, who's responsible for what. And, it's a decent thing to do. All right, so let's say that you don't have any kids that are involved in the dealership. You want to sell the whole thing. We have never bought a dealership without buying the real estate. And so I'm not sure how some of the other consolidators have worked, but that's been our thing. And I continue to be an investor in our real estate, but I don't want any more. I want to sell the remaining shares that I have out of our dealership, probably to my son. But, and at a metered pace. But I'm not afraid to invest in brick and mortar right now. And I think that there's probably a number of people like that. So,
yeah. And one thing I want to hit on, I wrote this down earlier when you're talking, but then I see this trend happening again when you're talking about, the fact that you get along with your brother well, got a good relationship with your son. And there's a mindset, though, that's kind of inherent with what you do, is this growth mindset of we're expanding the pie.
Right.
The pie continually can be expanded so everybody has a chance to win. If everybody, like you mentioned, put skin in the game, put time into play. But if the reverse were true, if you believe that the pie was fixed, and then all of a sudden now you're fighting over scraps, and when somebody else wins, somebody else loses, type of thing. So I wanted to come back to that before I lost that train of thought, because with this idea that you can continually expand, that the future can be better, which you've hit on multiple times, then everybody can get behind growth, progression, investment, and get along, because it doesn't mean that you're taken from somebody else or that the future's dire, by what you're doing.
Okay, there's a question in there somewhere.
Yeah, there is a little. I first had to get it out of my mind just to state that, but then I guess the question that I was going to have with that, because you take this aspect with growing your business, you take this aspect with succession planning, and then also just your family dynamic. Is that inherent? Is that something that you've just experienced because you did start in the late 70s, and so you did have a chance to get a little bit of a runway on, there's future ahead of this before you hit the early 80s?
Yeah.
What do you attribute that to?
Well, perseverance is one thing. And, as I mentioned, it took me 26 years to go from one store to two. As far as a vision on how to grow it, how fast to grow it, and how big do you want to be? In fact, the story that I've got coming up in Farm Equipment Magazine is entitled "How Big is Too Big?" And there's been probably an equal number of dealership locations that have closed or gone out of business because they sold too much rather than too little. And so you got to pay attention to the metrics. And is there a vision? A lot of times there is, but in our particular case, a lot of it was just being at the right place at the right time. Having an appetite for growth, I guess you kind of got to decide that early on, and whether you are going to be happy with that, 4 walls and 18 employees, and we kind of do our thing every day, and we take on some new products once in a while, and we hire a new person every once in a while, and a few people have retired and whatever. But to actually get aggressive and go out and talk to neighbors and let them know that we're in growth mode, and if you decide that you want to sell, get a hold of me. I mean, that's probably step number one, is communicating to those that would be prospects for you to acquire, to let them know that you're in acquisition mode. One of the things that I saw on your questions, Andy, was acquiring a dealership with a brand that you don't currently handle.
Right. Because you guys
especially
are
an OEM.
right. Because you guys are one of the rare ones that actually have had two different OEMs that you service, correct?
Well, yeah, with an asterisk. So when we bought the former Value Implement Group 3 years ago, we ended up, there were 3 Case IH stores and there was a New Holland store. And it was packaged together, so we bought the whole thing. And but the common link through them is that all stores handled Kubota. And so, you know, we were familiar with Kubota. We had that in most of our stores already. And, you know, good line. But New Holland was a complete new thing to us. We hadn't handled New Holland anytime, any place, anywhere. And so, getting that, you know, bringing that into the fold, even though it's a sister company to see it, you know, to Case IH, you know, we kind of bleed red, and it was a little bit of a struggle to kind of embrace the whole New Holland thing. But in the meantime, we have, and I wouldn't say that we're the best New Holland dealer in the Midwest, but I don't think we're the worst anymore. So we're making strides, and I think that New Holland will definitely be a growth part of our business moving forward.
Good. Well, I noticed you don't have a blue shirt on, but
no, I don't even own one.
I can get you one. So on that one, and I'm sorry I didn't prep you with this question, but it just kind of came to me because we work with a ton of dealers on integrating systems. Yeah. And just the system integration is so vital to being able to run a multi-store location.
Yeah.
So how does it, or does it even, all your different stores in your New Holland one especially, does that integrate with your others, and how do you make that work?
Yeah. Well, fortunately, we hitched our wagon to, and I don't mean to be plugging a particular line or a particular computer here, but we hitched our wagon to DIS years ago, and I'm sure that they're like every business system, dealer business system. They've got their shortcomings and they've got their great things, but it's kind of the devil, and so we have purchased dealerships that had systems other than that, and with the whole cloud thing and, however that stuff works these days, it's getting easier and easier. Now, the difficult thing is to train the people. But, these parts people and accounting people, they're sharp people, and it doesn't take long to get through that. Probably the worst are the salesmen that use the business system sporadically, and and so the learning curve on that is a little steep, but once they get there, it's not a big barrier. I wouldn't let the business system be a barrier to making an acquisition decision.
Good. And I'm glad you mentioned that, because you're plugging a future episode where we're talking about change management, because that has also come up a ton. And I will say that people typically say, like, the salesperson is the hardest to kind of get over the hump. But from our experience too, they can also be maybe the most influential and vocal if you can make champions there. But yes, training the people and get them used to the system, because it's worthless if it doesn't get used.
Right. Yep.
Good. Well, I'm glad you hit on that point, though, because I know you guys are unique in the sense that you have multiple OEMs that you work with, but you're not the only ones. And so we work with some other ones, and it's a unique scenario for sure.
Mm-hmm. Yeah, it's kind of learning a whole new language, and even though we're in the farm equipment business in Wisconsin, we've been in southern Wisconsin, and our forte has been row crop farmers. We never handled New Holland, so we were always kind of second best as far as hay mowers and balers and material handling equipment and stuff like that. But a couple of the stores that we own now are in pretty heavy hay area, and one of those is the New Holland dealership, and so it's it meets the needs of the farmers in that market, and so in addition to the line of tractors and combines that we like to move, we're now in the hay business again. I was in the hay business 40 years ago, but that all kind of died.
Yeah. From what I follow in valuation, it's a little more steady and follows those cattle.
Yeah, exactly. Yeah.
Okay. Well, I've got one more dealership focused question before I want to get to a couple questions more on maybe call them leadership or advice. But you talked a lot about the successes as you guys have grown and everything. Could you narrow down to one or two common mistakes that whether you've made it or you've seen other people make it that you would just want to warn people to avoid?
Well, we talked about the runs that we go on, and while the runs, a successful run in let's say whole good sales for a particular segment may be a great thing, and you can just knock them dead. But if you end up with a large number of trade-ins that are, and the day that you trade them, you don't realize they're overvalued, but sometimes you could kind of look at a deal and say, yeah, it's going to take the right guy to buy that trade-in for that price. Not really understanding that, okay, I'm in a one store operation, I cover 2 counties, and I now all of a sudden have 8 used Class 7 combines. Well, let's see, where are they going to go? And and why? How am I going to be able to sell one of these combines 2 counties over, 2 states over, maybe a country away? Who knows? Wherever you can sell it, and so you gotta have a little moxie in being able to figure out where and how to go with used equipment. And that's the like it or not, that's the game we're in. Most of the dealerships for sure in the Midwest and most in the U.S. take a trade on the majority of their deals. Okay. Yep, they're representing an OEM, but to get that piece out there, they need to make a trade. To sustain large market share, you trade often. And when you trade often, you end up with a lot of trades, right? And so you got to be equipped and take seriously remarketing that used equipment. You can't just line it up, in the back weeds or whatever, and expect people to knock down the door trying to buy your used combines. It takes some effort to get them remarketed, and that may be reconditioning, that may be not reconditioning and just kind of automatic auction. There may be a number of different avenues to go, and there's a lot of Casey Seymour and those kind of guys. They love to talk about used equipment remarketing, but that's a good thing, and we should be listening to those guys in this industry, the Casey Seymours and whoever is pushing used marketing, because that's what we are. We're used equipment marketers. Nothing happens till we sell the first new piece, but to sell a new piece, we generally have to trade in a used piece. And then to keep that snowball going, then we have to have a good parts department. We have to have a good service department and all of these things to support our new sales and to support our used sales. But nothing happens until we sell that first new piece, right? So
I'm hearing all the used equipment managers out there just yell amen to this.
Well, that's the truth. These guys should be they should be the highest recruited and the highest paid, not the guys that are going out saying, well, I'll trade you combines for $40,000. You know, I mean, that's the easy part. The hard part is getting that used one remarketed.
Right, right. And there's a lot that goes in with it. Like you said, the accurate valuation, because you do want that trade, but are you going to be able to resell it and not have them stack up so much that you can't wash them out?
Right.
It's a pretty thick logic puzzle that you have to manage there.
That is. And that's where the capital comes in, because you take a trade, it's yours. You know, when the proverbial whatever hits the fan, you know, at the end of the day, the used equipment is yours. You got to like it. You got to treat that like you're writing a check for it. And because a lot of times you do end up writing a check. It may not be the day you trade, but it'll be at some point. You gotta pay the piper. And if you're upside down on too many combine deals or four-wheel drive deals or sprayer deals or whatever, any big ag, it doesn't take long. You get upside down on 10 or 12 Class 8, Class 9 combines, and you know, it's nothing to see a dealer lose 50, 60, 70, maybe $100,000 on a combine. And pretty soon do that enough times and that'll hurt. Yeah.
Right. Exactly. Yeah, you can't. I mean, every once in a while you can make it big, like we did in the last couple of years. But the rest of the times you really got to focus on just getting on base, just doing the right kind of things, and not losing big.
Right.
'Cause you do that too often, it can hurt.
With that being said, Andy, sometimes you got to lose big. We make mistakes. We all make mistakes, and sometimes you're better to cut bait and go fish somewhere else.
Right.
Yeah.
Yes. Good. Well, I want to get to some of the last questions I had.
Sure.
I've enjoyed this conversation. There's a ton of advice. I'm looking forward to meeting you in person someday so I can even pick your brain more. But on these that I sent you there towards the bottom, I don't know. Are you a big reader? Do you get a chance to read ever much?
I'm not. One of my colleagues in this consulting thing is Russ Green, and you've met Russ.
Yes.
He reads every management book. Every time I see him, he's given me a book. I got one right here. He gave me the other day that I still haven't opened. And do I read a lot? I love to read, but I am a novel guy, and I'm a mystery, suspense. I love those. I love anything to do with World War II, especially fiction. Or fiction that that some of these writers, Ken Follett, some of those guys, I just absolutely love the work they do. But as far as reading self-improvement books and business books and things like that, I've read them when they're mandatory, but that's not my first choice when I pick up something to read.
Russ also sent me an article that I have to read. It's sitting in my inbox right now.
I would never have to look at the internet if all I did was just read Russ's emails, because he scours it for everything that's relevant in the farm equipment industry and funnels it to me and a handful of other people.
That's good. We're actually helping him with a course that Mac's putting on up in Madison at the Dealership Mind Summit. So I do have to read.
And we haven't talked about this, but I'll throw you a little added bonus. I told you that I retired a couple of years ago, 2.5 years ago. And my brother, my son, and my niece are the 3 shareholders that are still active in the business. Guess who's the president?
You.
None of them.
Oh, none of them.
None of them. Yeah.
Okay, explain this one.
Longtime employee. Started out as a parts man, and got into parts management, then service management, then did them both. Then as we grew, he engineered and oversaw the growth of the parts and service and accounting and precision.
Oof.
Basically everything in the dealership except whole goods. And he's wore all these hats, and he was the guy that we go to. He's soft-spoken, he's a thinker, but he's decisive and just got a very, very even temperament, really good for this business. He took my job when I carried my box of belongings out of my office 2.5 years ago, and has done a great job since then.
Ah,
Yeah.
which gets back to the point: have a long bench, develop, grow your talent,
Yeah.
and then you never know what an early parts person might grow into, but
Yeah.
it helps having that long bench and then maybe even multiple locations because you can do that.
Yeah. Well, and will my niece or my son eventually step into that role? Yeah, I'd bet pretty strong on it. But I wouldn't say he's a gap president, but some might call it that. We thought that he was the right guy to move the dealership forward and to learn from, with my niece and my son, and so far so good. So
Good. And I think that's one of the things that really makes your succession unique.
yeah. So that's one of the things that we're going to talk about at the Dealer Mind Summit.
Good. And I know, you guys
Yeah.
have an interesting story, but I'm looking forward to working with you guys on presenting that material. That's going to be a good time.
Yeah.
Side note, and this, I hope I'm not putting too much out there with Kevin, but a friend, Kevin Vandevort out at Huber Inc., also loves World War II books. He's given me some great recommendations. And so, anyways, if you know Kevin or have a chance to meet him, you guys will have to jam on that one.
Okay.
But, okay, one last question for you, Leo.
Sure.
You've given a lot of advice that, people can use in succession, M&A, leadership. What about that you've received? What's the best advice that you've received, especially as it pertains to business or your dealership?
Yeah, I've been fortunate to get advice, to have mentors throughout my career. I can point to a few that have really helped me along in kind of clarifying some things that I was really struggling with. One was an old farmer that told me, well, if you're going to get married, you might as well marry a pretty one. And so I'll throw that in there for my wife because I did. Took that advice. But another old farmer told me, always tell the truth, because then you never have to remember what you told people. And I take that to heart. When I'm telling a story, or when I was selling a tractor or a combine or whatever, just be upfront, be honest, and if the thing has got a click in the transmission, the last thing I want to do is know about something and see the guy drive off with a tractor and then get the phone call a day later or 2 weeks later or whatever. Hey, there's a click in this transmission. What's going on with it? Okay, well, if I knew it and didn't disclose it, bad on me. If I knew it and disclosed it and he said, yeah, okay, I understand that, I'll take the risk, bad on him. So
that's good.
These aren't very deep thoughts here, Andy. I'm sorry about that. But
no, I think that's even. The advice is great, just the integrity of it all, but also tying back in with where we just started this conversation, which I think is a good, good twist on all this. One of the pieces of advice that Ivan Dorhout said that he had received that was one of the best came from a farmer that stopped into his shop as well, and his led to succession planning and passing it down to Brandon. But
what was that advice, by the way?
It was actually that he should, I think the farmer asked him about succession planning, and I was like, I'm really considering it, and the farmer's like, you should actually be doing it right now. And it was well before, that actually happened. But he's like, you have to be planning for it now, even though you might not be willing to do it for a while yet. It has to start early.
Absolutely. Yeah. And, and a few things that kind of came to mind, I heard at a seminar years ago about preparing your business to sell. And every single one of the points that they made, they did things like, just minuscule things like cancel subscriptions to things that you don't read. Get your expenses in line. Don't be charging the bouquet of flowers you sent your wife to the company. Things like that. And what I got from that, my takeaway was, well, prepare yourself to sell the business every day. Make sure that the things you do and the way you run your business, make it as if you've got that group of buyers that's coming in this afternoon. So when they look at it, they say, wow, this is a well-run business.
Yeah, that's good. And that, I think we talked about this before, but keep playing to win. Getting back to the basketball analogies, that it's just, even though now we're definitely into more of a bear market, continue to play to win like you're in it for the long game.
Yeah.
Keep on, doing the right kind of things, investing if it makes sense. That, if you do that, then your ducks should be in order. The future should be bright.
Yeah.
Whether you're looking to sell or just continuing to win.
Yeah.
Both are good.
I sure hope so.
Good. Good, Leo. Well, hey, I appreciate all the time you gave. This is a great conversation. I look forward to meeting you in person, but I just really appreciate the time you gave us on joining Beyond the Hood.
Good.
Great.
Thank you.
Okay. Well, take care, and thank you, everybody, for joining myself and Leo Johnson from Johnson Tractor on Beyond the Hood with Tractor Zoom. Until next time, take care.